ESG. These three words stand for environmental, social, and governance. And this is a framework that measures a company's sustainability and ethical impact. What's all this fuss about ESG?
Whether we are consumers of goods and services, whether we are investors, whether we are manufacturers, deliverers of products and services, and so on, that all of us have a role to play, a very, very important and active role to play. And the opportunity for green investing and carbon neutrality that exists in India is a pretty massive opportunity. We think at Sundaram that this is easily over $1 trillion of investment in a year. That is the quantum of investing opportunity that is there. We believe that the opportunity is enormous to be able to invest profitably in the green and carbon neutrality space.
Market Thalaivas brought to you by Sundaram Alternates.
Welcome back to Market Thalaivas. Stay tuned for an in-depth discussion packed with valuable insights to help you navigate the ever-evolving market terrain. I am your host, Arjun Nagarajan. In this episode, we are joined by Mr. Karthik Athreya, Head of Strategy Private Credit at Sundaram Alternates. Today, we ask the question, what is ESG and why is it so important in today's times? Let's jump right in and explore these topics. ESG. These three words stand for environmental, social, and governance. And this is a framework that measures a company's sustainability and ethical impact. Put another way, ESG is a set of standards for how a company operates with regard to the planet and its people. Now, you may ask the question, so what? ESG is important because we are in an increasingly socially conscious world, and socially conscious investors use this as one key criteria that helps them screen potential investments. Now, what do investors see through ESG? They see if the company they plan to invest in is able to limit its negative impact on the environment, on the society, and governance bodies. They also use ESG to measure if the company is able to enhance the positive impact the company has on the environment, on the society, and on governance bodies. And finally, with changing perceptions and needs, ESG helps meet the needs of the present generation who are increasingly conscious and aware of the impact that they and the companies they invest in will have on our future generations. Getting down to brass tacks, what does ESG mean in practical terms, and what do ESG ratings take into account? With respect to environment, it measures the impact the company has on the natural environment that include waste, pollution, resource depletion, greenhouse gas emissions, climate change, and deforestation. With respect to society, it measures human rights, labor standards, community relations, and support for underserved communities. With respect to governance, it measures business ethics, compliance, accurate accounting methods, salary structures for shareholders, and leadership selection. In simple terms, it is no longer cool to be indifferent to the environment, society, and governance structures. We're now joined by Karthik. Let's ask him a host of questions on ESG. Hi, Karthik. Welcome to the show.
Thank you for having me, Arjun.
Oh, pleasure. I'll ask you for the first question straight away. What's all this fuss about ESG? Is this a real priority in India from an opportunity point of view? Should we be even talking about this? Should we be really even considering ESG as an investment avenue?
The answer is a resounding yes, Arjun. But, I'm tempted to sort of refer to your introduction where you very nicely explained what ESG meant. And, most of the people, including investors, stakeholders, somehow get lost in the theory of ESG and lose sight of the fact that it's a $1 trillion opportunity from an India investing standpoint. I will try and give some perspectives while we are in the early stages of exploring how to make viable investments in this space. Hopefully that is beneficial to the audience that will look at our show today. But just to, again, in an investor's perspective, put a preface to our conversation. we talk about India being a world leader in many things. The largest democracy, the most efficient elections, the largest forefront of digital interfaces from a B2C perspective, the UPI, and so on and so forth. But not many people may be aware that India is also a world leader in carbon emissions. The world approximately generates 50 billion tons of carbon dioxide emissions per year. India is roughly 8% of that. We are only third behind China and the US from an emission perspective. While one can argue that that is a byproduct of rapid industrialization, the economy growing at 6, 7, 8% a year, numerous amount of urban and rural moving to city developments happening, and so on and so forth. What that has actually meant is that our days and our years are becoming hotter by the year. So just to put this again in perspective, I think in the last 15 years, global warming is real, where the average temperatures have increased by almost 1.5 degrees in the last 15 years. I mean, just think about that, right? I mean, if in our own lifetimes and under our noses in the last 15 years that you and I have probably been working, the days have gotten so much more hotter. And, just again, as a frame of reference, this year, 2024, has been the hottest year, I'm told, in the history of what we've known in civilization. So that's saying something in terms of the catastrophic effect that, rapid industrialization, deforestation, numerous amounts of perhaps lack of policy awareness and focus to invest in reversing the effects of climate change have resulted in. While this may sound a little theoretical on what is E, S, and G, the E from the ESG is probably the most important existential crisis that we have from a human civilization point today to deal with. So I would say that's a pretty important cause for the entire world, not just investors and select stakeholders in India to deal with. From that perspective, one can also see, I mean, there is often so many memes I'm seeing on Instagram and social media about how the air is so unbreathable in Delhi. But if you look at India, effectively the average AQI, which is the air quality index level that determines how toxic the air that we breathe is, range between, let's say, 150 to 200 to 500 on an average. So in Delhi, I believe that in the early part of this year, the AQI reached 1600. So that effectively is unbreathable air. I mean, one will have to die, if that is sustained. So I think it behoves all of us, whether we are consumers of goods and services, whether we are investors, whether we are manufacturers, deliverers of products and services, and so on, that all of us have a role to play, a very, very important and active role to play. And the opportunity for green investing and carbon neutrality that exists in India is a pretty massive opportunity. As I said at the beginning of this conversation, we think at Sundaram that this is easily over $1 trillion of investment in a year. That is the quantum of investing opportunity that is there. While many people may not be as aware of the number of investors who are actually active in this space, there are numerous private equity investors, venture capital investors who invest in things like, climate technologies, early stage investments, new ways of doing things, product innovations, and so on, and actually are quite profitable. Right? And on the other end of the spectrum, there are, credit players, structured credit, structured finance players like us, or even project finance lenders, including the banks, who are actually doing a fair amount of heavy lifting as far as trying to reverse the effects of climate change go. Equally important, probably where India has made the most progress and where a lot of the investment opportunity is from an India point of view is in the S of the ESG, which is really social impact. So, in layman's words, what does this mean? So S actually means anything that has, as you rightly put it, an impact on society. So whether it is on the real estate side, whether it is on the infrastructure side, whether it is transportation, energy, and so on and so forth. There are numerous sectors, subsectors, which are very, very viable investment opportunities for investors like us. And it is our goal that we build a very, very sustainable business in ESG investing, or green investing, as we like to call it at Sundaram. To be able to fold eventually all the strategies that we run on the credit side or on the structured finance high yield side, whether it's real estate credit, whether it is mid-market lending, whether it is special situations, whether it is corporate bond business, and so on and so forth, all will eventually, in our opinion, fold into a sustainability and impact-oriented set of themes that we want to eventually launch, which I'd be happy to talk about later in this conversation. So, in summary, Arjun, we believe that the opportunity is enormous to be able to invest profitably in the green and carbon neutrality space.
Fair enough. Yeah, that really sounds fairly good. And one main question that comes up after that is, how does one translate this into an investment opportunity? If you can talk about what exactly the opportunity is for investors in the ESG space in India, if you can help us with that then.
Sure. Just to, again, because I found in our own experience over the last 2 years that when we talk about esoteric things like climate and environment and so on, there are a whole bunch of acronyms, terminologies that tend to confuse people and really create an impression that this is fluff. So what we at Sundaram have done is always plain speak, straightforward, think simple, and look at practical solutions. So if we step back and look at what is the quantitative opportunity as far as E, S, and G are concerned, G is a given, John. Without G, an investor is really not going to make any bets. And I think this has been in existence for several decades now. There are LPA agreements that govern how governance should work. Whether it is in the integrity, the quality of reporting systems, and so on and so forth. So I'm not going to delve too much into the G in this conversation, because I think that is more or less now an absorbed concept as far as investing goes. But to talk about the E to begin with, our understanding is that the estimates of investments that are required to basically reverse the effects of climate change in the world, as in a global basis, is roughly around 10 trillion USD per year. That's a massive number, 10 trillion USD, right? That's triple the GDP of India, just to put it in context. And within this, there are various countries and world leaders, whether it is in the G20 summit or, increasingly environmentally known as the COP summits, where people go in and, give directions, including our own honorable prime minister has, gone on to the world stage and talked about emission targets reductions, up to 2030, 2050, 2070. While people believe that, 2070, who's going to be living? The opportunity is clear and present, because we're not going to be making climate and carbon neutrality investments for our own lifespans. We're going to actually make it for our children and our children's children. So, effectively, if I went to you, and I have 2 boys, and I'm sure you have children as well, as do most of our colleagues, and we said that, would you be able to put down 10 lakhs a year towards an investment that will ensure a better quality of air, for your child? Wouldn't you do it? I think I would do it in a heartbeat. I think so. That's really where Sundaram comes from, and says that, look, if the opportunity is presented in a manner that is accessible, that is monetizable, that generates a decent risk-adjusted return, then investors would take to it. And our goal at Sundaram Private Credit is to package all of what I just said into a set of investable products that we would want to increasingly start offering to our investors. But from an absolute opportunity point of view, how does the 10 trillion global carbon investment translate to an India level? So in India, based on the commitments that our Prime Minister has made, the estimates of annual investments that are needed in just the E of the ESG is roughly around 100 billion US dollars per year. Now, this is across the areas of climate tech. How do we make transactions more efficient? how do we improve or reduce carbon emissions, from a real estate industry perspective, which we are actively involved with, by the way. How do you make more buildings sustainable, from a green emission point of view? We've heard about these LEED buildings, and we've seen all these nice boards of platinum, LEED, and Gೃಹ Seva and all of that stuff. Those actually mean real stuff. It influences, for example, in the case of real estate, the kind of materials, the kind of bricks, the kind of insulation materials that you put into making a building, right? Whether it's a residence or a commercial building or a retail mall, there are effective ways to sustainably reduce carbon emissions going forward, coming from things like, air conditioners, energy consumptions, recycling of waste, which is a big theme that several years ago, the current BJP government took up in terms of, Swachh Bharat. So the idea is that, all of these are not, just associated with, hygiene and sanitation, but these have ripple effects as far as green emissions and carbon emissions go. So effectively, we've categorized at Sundaram that against 100 billion, the investments that are actually being made are roughly around 20 billion, of which 5 billion roughly is on the equity side, which are really early stage, tech investments, deep tech, and so on and so forth. And the remaining 15 to 17 billion are credit investments, where these are split between project finance from banks, bridge and structured finance by private credit players like ourselves, some sort of structured equity, quasi-equity, but downside protected instruments from private equity guys, all going into setting up of things like, green buildings, sustainable ways of recycling waste, looking at reducing emissions from a transportation. So we've seen this whole mobility-related buzzword in terms of switching cars from, petrol and diesel to EVs. Hybrids are a thing now. And effectively, if you look at transportation, throughout, transportation includes transportation and storage. So things like, green warehousing, energy efficient cold storage, all of which are sort of derivatives of Sundaram Finance, which is our flagship company's equipment financing business. And we have at the parent level an active group that focuses just on, EV financing and so on. So, in the last 2-3 years, we took from various responsible investing and responsible lending or financing themes that the group has adopted. And, we sort of started packaging them, into our private credit strategy. So, for example, in the case of real estate, where we are now on our fourth fund, what we have started to follow is in every single investment that we do, every project that we finance, because, we are at the asset creation stage, we are insisting that the development has, and by the way, we do only residential development. So we are in a way pioneers from a residential green, thought leadership perspective, where we are insisting on EV charging stations to be put, recycling to actually be done. We're setting up MIS and dashboards to be able to monitor impact from when we invest to when we exit. We are advocates in terms of educating developers on the benefits long term of putting in these sort of energy efficient materials into building, their various apartments and villas and condos and so on and so forth. And we actually believe, and we've seen, and developers have seen the demonstration of how all of this actually results. In some cases, and increasingly starting to get bigger, a better price that they can command, for their product. And if you see Total Environment in Bangalore, they focus on, green developments on the residential side. We ourselves have financed a fantastic developer called Togetherments in Bangalore and in Hyderabad. We're looking at several more. So, close to 50 of our projects have everything that I said, from EV charging stations to recycling of waste to effective rainwater harvesting to, green materials or sustainable materials that go into making the buildings. So in the short history of the last 2 years, on an annual basis, our small efforts have resulted in savings of almost 1 million, tons of carbon emissions that we've been able to save, across perhaps 50 projects. We've been able to, touch, close to 6 million square feet of developments, which are all green developments. I'm just talking about a very, very small microcosm of our real estate credit strategy, which we've now made mainstream. as far as real estate credit strategy goes. And we're starting to implement similar stuff on the non-real estate corporate credit side, where we screen for investments into sectors that are not polluting, that are in the exclusion list of various impact investors, like toxic chemicals, gambling, of course, a little more on the social side, not just on the environment side. But essentially, these are sort of themes, that, we screen at a portfolio level to make sure that, we don't go into sectors that are polluting. And in the underlying projects and businesses that we invest, our focus is to create, a positive, net zero impact to aid the government of India's mission to lowering and not being at the leaderboard as far as carbon emissions go from a global perspective. From a social perspective, there are massive opportunities, and India, I would say, is because of the fact that it's the largest, one of the largest populations in the world. The impact is amplified several hundred X times. For example, concepts like affordable housing, social infrastructure like education, schools, hospitals, recreational parks, ability to look at infrastructure projects that offer access, to large portions of population, to things like leisure, entertainment, and so on, all fall within the aspect of social. So it is not an esoteric S, where social only means that you do women's engenderment or empowerment. You look at equality. So those are not the only themes, although they are pivotal and very important from a societal perspective. There are very tangible and active sectors and projects and businesses that an ESG focused player can actually put money to good use. And I've always believed that charity investments cannot be deemed as charity. So investments have to pay for themselves. Charity has to sort of feed, as they say in the West, pay it forward, which means that if you create an investment from an ESG perspective, that has to start paying forward, which means it has to create a return for you. So as Mr. Jayant Sinha, who's at the forefront of green investing in India, is told me recently in one of the conferences that we had in Delhi a few weeks ago, green investing and ESG investing have to be profitable. So the idea is that we don't do subsidized investments just because they deliver societal impact. The idea is that we have a fiduciary towards our investors to create returns and risk-adjusted returns. So from that perspective, the scale of the opportunity is so massive that if India requires 100 billion a year and there's only 20 billion which is bursting at the seams being done, there's an 80 billion opportunity that is left in all the areas that I mentioned, whether it's in the area of mobility, whether it's in agriculture, whether it's in the circularization economy, or in layman's terms, things like affordable housing, social infrastructure, even BFSI, which is a very big theme as far as listed and rated corporate bonds or fixed income is concerned. Things like microfinance, access to digital banking, and so on and so forth are massive themes from an inclusion perspective. So those are also under the S of the ESG. So there is a massive amount of opportunity that is sustainable, which is very much within the agenda of every government in the world. But I must also say a little bit on the where it can be deemed as an opportunity or a failure. But of the 10 trillion USD that's required, or the 20 billion in India that is actually being invested, very little is actually coming from public or government sources. So effectively, all of the investments that are going into climate change, at least, are actually coming from private sources. Which is something that I think global leaders are aware. These are often topics of discussion from in various forums, whether it's the G20, COPs, and so on and so forth. And also, from a taxonomy point of view, where I think the only sort of legitimate taxonomy actually means a set of rules and standards that govern, green investing. I think they originated logically, in Europe, which has been at the forefront of, fighting climate change and so on. And they are the fourth largest emitter, so I think they've taken it upon themselves and taken some accountability. But I think taxonomy is sort of slowly starting to roll out And as I said in several of the forums that I've spoken, about green investing in ESG, we at Sundaram don't really wait for taxonomy to come and for somebody to tell us what to do, how to do, when to do, and so on. So we've sort of been responsible and taken the charge in terms of moving ahead with our own version or our own little taxonomies in terms of how we think we can make an impact, whether it's on climate change, whether it's on society, and effectively package investing into a set of funds that are accessible to investors, whether they are a HNI or going all the way up to a pension fund. So so that's sort of how we look at the opportunity space. So we think it's a multi-billion-dollar opportunity that is available as long as the earth keeps rotating and the sun keeps shining. So we think this is a very, very viable investment opportunity that we are absolutely keen to get into and monetize.
Fair enough. Hey, after all this, I'm fairly convinced about why we need to probably have had this yesterday. Now, but for our audience, you've sort of touched upon this in your previous answer, but if you can stress on why this should be a priority for asset managers, how would you look at it if you're looking at it from an asset manager point of view?
Much of what I said is coming from our role as an asset manager. As you know, Sundaram Alternates is an asset manager that deals with alternative investing instruments. We have several strategies ongoing at the moment. And I would say roughly half of our 300 million or even 3/4 of our 300 million AUM in the credit side alone that we manage, is more or less touching E or S in a pretty definitive way. So the need is very self-serving, right? I mean, I refer back to that anecdotal question that I asked you that, Arjun, if you were to spend 10 lakhs a year, to help your child breathe easier, wouldn't you do it? I think that's, in a sense, where we come from. And we believe that, as you rightly put it, the need for, ESG investing is yesterday or maybe even day before. And so we think, it is today much overdue in terms of us as fiduciaries of capital to be able to be, in many ways, advocates for change, advocates for, things that are positive as far as the environment or the future is concerned. And effectively, as I sort of started this whole conversation, we are in an existential crisis, right? So if we are able to find themes, situations, opportunities, deals, to put it simply, where our capital can make a change in terms of having a positive impact on the world, why not, right? And so we are in many ways putting our money where our mouth is, and as asset managers and collectively, India's private credit market itself, as you know, I think we discussed it in our last episode. The AIF industry, particularly Category 2, which deals with private equity and private credit, has grown from nothing to close to 10 lakh crores in the last decade. So imagine if every rupee of that 10 lakh crores were to touch some aspect of ENS, what a multiplier effect that would have. And in my opinion, I'm just wagering a guess that 20 billion that is actually being invested versus the 100 billion from an impact perspective would be closer to 60 or 70 billion. And help our country reach emission targets and net zero goals that the government has set in half the time that we are trying to do this or achieve this at. And at the end of the day, as I said also, nothing is charity, and I think that this is a very, very viable asset class for investors to get into. It depends. There is effort which will need to be made by asset managers, where we in many ways are disintermediating the flow of capital, right, from source to end use. And if we are not going to do this, then who else will? And so if we can actually, within our own strategies, whether it is logistics, whether it is real estate, whether it is consumer, whether it is IT, ITES, whether it is energy, every single sector has elements of ENS very much built into its building blocks. And there is, I think, if I'm not mistaken, 60%, 50 to 60% of carbon emissions come from, energy efficiency or inefficiency. Including, I would say, the use of natural resources like coal, oil, and gas, and so on. And another 20-25% come from, transportation, storage, and so on, where largely those are proxies of movement of, agricultural products and various other goods and services that have to move towards being consumed from being produced in one part of the world to being consumed in another part of the world. And then the balance, comes from the ability to effectively recycle rather than consume in excess and waste in excess. So every single piece of this is existent at a microcosm in every deal that we do. As I said, in the case of real estate, we are at the asset creation stage, so we can have sustainable materials, we can have recycling. In the case of financing the capex of a manufacturing plant, for example, again the same process comes into play in terms of having enough sort of green built around factories, sustainable materials in factories, and so on and so forth. So not to sort of sound repetitive, but I think the business is repetitive, because I think the goal of green is to be repetitive. And so asset managers, I think, have a unique ability to be at the intersection of money and end use, and hence, in many ways, be the greatest proponents for change. That can actually fuel a positive green culture. And, we at Sundaram certainly aim to be one.
Fair enough. I was just about to ask you how Sundaram Alternates is approaching the topic of ESG, but then I think you've dealt with it in fair much of detail. So I'll add one question here then. Can you talk about what Sundaram Alternates has probably done so far in the ESG space? If you can probably share some anecdotes with us.
Sure. For starters, we have our own ESG policy, which is not just having a checklist, which is there, but effectively our ESG policy, has evolved, been actively developed. We have our own in-house ESG compliance officer, whose full-time job it is to ensure that all our investments on the private credit side comply with our ES policy. We've put ourselves to the test in terms of putting this on our website and holding ourselves to it. This policy has been audited and diligenced, and with inputs, from some of the largest impact investors in the world. So in many ways, it is real. It deals with, identifying areas in every single one of our transactions where we can have positive E&S impact. To be able to have processes, whether it is due diligence, whether it is in the form of underwriting, whether it is deal structures, positive incentivization, alignment of interests, and actually tools that we can use. So, for example, in real estate, we actually use a tool called EDGE, which is an environment or a carbon emission measuring system that has been vetted by the International Finance Corporation, IFC as it is called, which we found to be the most practical way in which we can actually measure the carbon emissions of a project, for example, when we enter, and be able to monitor the impact of that right through to when we exit. So our ES policy has a set of processes that help us identify, help us measure, and continue to be able to monitor on a deal basis as well as on a portfolio basis. What is the overall impact that a fund has on a set of guidelines that it has set for itself from an ENS perspective. So all of this is part of our ENS policy, which is out on our website. So this is a big step. People think, it's just, we have a checklist and it's like any other contract. And so what's the big deal? But the evolution of this has taken us 3.5 years. And nobody told us to do it. We did it suo moto, simply because we believe, for all the reasons I mentioned earlier, that we ought to be fairly responsible from an investing perspective. So what we have done is not just have an ENS policy, but executed it across 2 of our funds. As I said, in real estate, we are in Fund 4. So starting from Fund 3, right up to every single deal as far as Fund 4. We are highly compliant as far as our ENS policy is concerned, which means that those statistics that I mentioned to you of 1 million tons of carbon emissions that we saved, or impacting 6 million square feet of real estate space, or had an impact across close to I would say 12 to 15,000 families. All of that are real numbers in terms of impact that we've had, and we operate only in Chennai, Bangalore, and Hyderabad. I mean, just to put things in context, right? And in our business, cumulatively, from a real estate point of view, is 2,000 crores. That is, not even 150 million US. So, if we were to, for example, have $1 billion under management, and everything that I told you in terms of numbers and impact would be 10x. So that's sort of the platform that we are setting ourselves up with to scale. And our goal is to be as templatized as possible when we start rolling out our ENS across strategies, and start to do this even on the non-real estate side, wherever there are asset creation involved, wherever there is emission of waste, where there is elements of energy that can be saved, where some of our money will actually go into all of these to be able to have a positive impact as far as emissions is concerned. From a strategy point of view, we are actively also investing in things like affordable housing. We've made several affordable housing investments from a societal or social perspective. We funded several schools and around which catchments or real estate developments have come up, where there is increasing access to education, primary education, secondary education, and so on. We've invested in corporate bonds in the microfinance, as have others, like Northern Arc and Vibhuti, for example, where we think these at the end of the day are all part of the greater financial inclusion theme, which involves giving access to finance to people who hitherto don't receive or are difficult to receive. And we also are looking at specific themes to do with rolling out all of this across the larger sectors that we have, whether it's pharmaceutical, whether it's specialty chemicals, and sectors which have in the past not greatly focused on ENS as a theme. Stuff that we want to positively influence, and so we try and do this through innovative deal structures. That if you complete a certain piece of demonstrated carbon emission reductions, then perhaps the cost of capital would reduce over time. We are backward integrating into having conversations with investors and global investors, where we can actually offer a theoretical concept of blended finance into the Indian markets. We are in discussions again to launch our own version of the green bond, to be able to make multitude of investments across the various strategies that we have. And so I think where we are right now is tangibly creating impact from a deal to deal perspective on every single one of our funds. And we perhaps are maybe in at the end of the first phase, where we have our own little taxonomy. We put together our ENS policy. We are on the verge of actively implementing it. And the second phase is where we want to scale it up, and where we intend to start doing new products that focus around themes like sustainability and impact, where we can raise money from focused impact investors to be able to amplify the grassroots and the backbone and the systems of what we've already set up. So I think that's sort of where we are. And in the Sundaram way, we are doing all of this quietly, unannounced, looking at impact ourselves, looking at ourselves in the mirror every year, at the end of every year, and saying, what is it that we've really done, and how can we sort of widen the impact of what we're doing with all our stakeholders, right? Whether it's on the investee on one hand, which is the greatest impact, and then also with our investors on the other side, where we're saying, while it may not necessarily be at the forefront of your themes, we are finding a profitable way to do this. So instead of, let's say, $1 million, if you can commit $2 million, you are part of, colloquially put, a karmic revolution, right? Where you are part and parcel of the solution. and you are doing your own little bit for the world while making money while doing so. So I think that's sort of the stage at which we are right now in terms of advocacy, in terms of institutionalization, rolling out our templates over a larger scale of business. It's sort of where we are.
Fair enough. That's lovely to hear. Now, all of this sounds like a lot of work and a lot of investment from what you're saying. Can you also share with us some challenges you've faced in the past? If you can talk to us about the viability of ESG execution at the investee level. If you can touch upon that and talk about some challenges you've actually faced from the investees level in the recent past.
Oh, yeah. So as we started off this conversation, Arjun, $10 trillion is the need of the world. Hardly 10% being spent against it, right? And this is because of perception. Perceptions, are that why should I do this? Of what use is it to me today? Am I getting paid for it? What is really the impact that I'm delivering? I'm running my little factory in Vijayawada. Of what use is all this to the world? So there's a lot of questions, and rightly so, that developers and promoters and entrepreneurs are asking before they even agree in principle to sort of do some of the things that we ask of them. And the bottom line is that this has to be a change by the collective, right? This can't be just Sundaram trying to do its bit. It's got to find favor with the rest of the investing group, the other stakeholders, including the government, which has to come in and say that a mission is one thing, but a set of rules to be able to move people towards that is another entirely. So for example, this whole announcement that 30% of the automobiles running on Indian roads ought to be EV, is a mission, right? Now, what are the sort of rules that enable that? Are you getting a tax break? Are you getting from a manufacturer's perspective replaceable batteries? And the batteries, electronic batteries, are another story in themselves. Are you sort of getting a tax break for investments that you make in an ESG sector, or for that matter, an investment in an ESG oriented fund? Is income from that exempt? So there are a lot of things from an enabler point of view that the government can do, and we hope that they will, because everybody has to recognize that this is a real existential problem. But for our part, the whole effort of educating a promoter and an entrepreneur sometimes is, or most times, is extremely taxing, because you've got to answer all of these questions and convince the guy that what we're asking from him is something that it's in his own interest to do so. As I mentioned, the brief example that we've had examples of developers actually being able to charge 200 rupees a square feet more because they put in some of the stuff that we asked them to do, and they were able to price it onwards to a customer who believed that he or she is doing something for the greater good and was willing to pay for it. So I think increasingly, as other asset managers look to make this a standard, investors look to also in a way pay it forward, and the government may not necessarily come in with money, but if they can come in with a set of rules that accelerate a change towards going green, benefiting larger society, marks for higher integrity, and so on and so forth, I think the momentum will accelerate quite rapidly. But I think that has been the largest challenge, to be able to have a consistent set of successes, if you will, and try to make real change happen on the ground, and simply because of awareness or the lack of it. So I think that's been a difficult thing, but now we've sort of held ourselves to this standard and bravely said that we will go where no man has gone, as they said in Star Trek. and we will go in and start executing. Because we put it up in our ENS policy and it's up on our website for all to see. We're actually going to go ahead and do this. Who knows? Maybe we'll not grow as fast as some of our competition. We might not be the most profitable because we want to pass on, some of the returns to promoters and entrepreneurs who actually embrace this change. Who knows? But at the end of the day, we believe it is the right thing to do. And we think maybe not now, maybe not in 10 years, but in 15, 20 years, when perhaps I no longer am an asset manager or a fund manager or an advisor or whatever it is, the concept of a successful investment will move from a risk-adjusted return to a value-adjusted return. So I think, the value-adjusted return, which denotes the quality of life, societal impact, better for the future, and all of those are extremely tangible things which we don't realize, which is actually having a financial drain from an educational point of view, from a health point of view, from a hospital bill point of view, from a longevity of life point of view, from a quality of life. You yourself are an active yoga practitioner, so you realize some of what I'm saying. So I think all of this will have to translate at some point to a value-adjusted rate of return, and that's sort of what we're really after from a Sundaram private credit standpoint. So that's been the challenge, but we have embraced it as a positive challenge, and we have gotten down to the brass tacks, as you put it in the opening, where we sit with a developer or a promoter and debate with him about the benefits that he's bringing to society, and actually make him or her feel proud that they are proponents for change.
Wonderful. It's really wonderful to listen to you explain and take our viewers through every single detail of ESG. So if I can sort of summarize all of it, it actually sounds like this grandfather planting a mango tree, not for himself, but for his grandchildren in the future generations after that. I'm not going to leave you now. I'm going to ask you one more question. Can you also share with us any larger plans Sundaram Alternates has to grow in this space? I can sense that there's quite a lot that we're looking forward to, but if you can share some maybe in the next few minutes, and then I'll let you go.
Sure, absolutely, Arjun. Be happy to. So we have two pathways towards going green and pro society. One is, as I have talked about so far, in terms of channeling our existing investment strategies towards impact, and the other is we are in the process of launching our very first sustainability and impact fund, where we are putting together the specs to launch a $500 million fund, both in India as well as in a jurisdiction that is open to international and impact investors. Many of whom that we are in discussions with actively, where the goal is to invest into a cross section of many things that I just talked about on this show, and create a very a dedicated fund, which we believe is probably likely to be the first of its kind. From a structured finance or a credit-oriented standpoint, there are many private equity funds, that are oriented towards, green venture capital funds, that are high risk, high return propositions. But from a capital protected, large money to be absorbed, downside protected, risk adjusted, and eventually value adjusted return model, our goal is to launch this in the first half of the coming fiscal. Where the idea is to raise, close to $500 million, and we have a massive pipeline of potential investment opportunity that is already building, where we will touch upon each of the aspects that we talked about. Whether it is energy efficiency, whether it's mobility, whether it is the secularization economy or waste management and recycling of stuff, whether it is in the area of affordable housing, social infrastructure, and so on. But every single deal should have a huge portion or proportion of impact, on a particular topic or a theme that the fund is mandated to do. So I think we're going to call it a SAFE fund, which is a play on words, a Sustainability and Impact Fund, SAIF. And we're looking to launch this in the coming quarter. So I think we're already filed for approvals. So hopefully that comes through quickly. And, we're able to actually, walk the talk even more.
Wonderful, wonderful. It was really great having you here, Karthik, and it was really wonderful having you to explain all of the details of ESG for our viewers. It's just simply wonderful having you here, and I think this episode was much, much more detailed than I ever had thought. Great.
Thank you,
Thank
Arjun,
you so much.
most welcome. Happy to be here. Thank you for inviting me and your insightful questions. They were all on point, and I hope our viewers and audience, have absorbed the importance of this as a theme and the practical ability to implement and the viability of this as an investment topic going forward, because we will be approaching investors very soon. So this comes at a very timely moment. Thank you, Arjun. Appreciate it.
Pleasure. Thank you.